Granoff, Chapter 7, Infrastructure. Infrastructure is the government's capital assets, immovable, stationary in nature, preserved for a longer period of time. Roads, sidewalks, buildings, tunnels, highways, drainage systems, water and sewer systems, dam, lighting systems, and so on. GASB Statement 34 requires that infrastructure be accounted for in the same manner as the capital assets. An exception: infrastructure need not be depreciated if the government can demonstrate that they are being maintained, preserved at a specified condition level. To avoid recording depreciation, governments must perform condition assessments at least every 3 years, have an up-to-date inventory of eligible assets, estimate the amount to maintain and preserve the eligible assets. Two approaches for infrastructure accounting: traditional approach, capitalize and depreciate; modified approach, all expenditures incurred to maintain and preserve those assets should be expensed. Addition and improvements should be capitalized. Assessed condition of the assets and basis of that assessment must be disclosed. Let's look at some examples. Here is from the City of Los Angeles, Notes to the Basic Financial Statements. You see a listing of the infrastructure and the reporting method. Criticism of Statement Number 34's approach to infrastructure. No indication that data on the historical cost of infrastructure would be used. No need to capitalize those assets because they cannot be stolen or misused. Comparison between measure of output, performance, and monetary value assigned to the assets is not meaningful. Infrastructure assets seldom have alternative uses. Past construction costs are of no significance. These are criticisms. However, we still follow GASB Statement 34. Transition for infrastructure. Prospective reporting is required at effective statement date. Now notice that this has been in place for quite some time. So it's here, and this slide just gives you some background information, but it's here to stay. Illustration: for example, in 2008, the replacement cost of a road constructed in 1994 was $10 million. A road construction price level index was 90 for 1994 and 120 for 2008. The road would be recorded at an initial cost of $7.5 million. If the road had a useful life of 30 years, then at the end of 2008, after 15 years, it would be 50% depreciated. Hence, it would have a book value of $3.75 million. Now, this is back to the transition. This is not something we do right now, but it gives you an idea of some of the controversy, some of the growing pains. But again, GASB 34 infrastructure reporting is here to stay. Accounting for collectibles. GASB number 34 does not require capitalization of artworks if they are held for public exhibition, education, or research in furtherance of public service rather than for financial gain, and protected and reserved, and the proceeds from sale are used to acquire other collectibles. Art and collectibles that do not meet these conditions, notice the ands, must be capitalized.